inflation and Omicron. Hello and welcome to our weekly outlook. Uncertainty of the impact from the Omicron variant will dominate the market sentiment in the week ahead. However, the central bank's monetary policy meeting and inflation data from United States and China also must be watched closely. Last week, despite the fever-created jobs, the unemployment rate fell to 4.2% in the United States. And now, inflation numbers will be very important to watch. Let's review the week ahead and the most important data to watch with an important update from the IFC markets. Number 1, RBA meeting. Inflation is increasing and labor market is fine. Therefore, in the normal conditions, we could see a step forward with 25 basic points increasing interest rates. And now, with Omicron's concerns, Reserve Bank of Australia can be so cautionary in Tuesday's monetary policy meeting for all of its decisions. For now, and by the year end, it is hard to say they can change the policies. This expected holding policy can hold the pressure on Aussie against its crisis. Number 2, BOC meeting. The Bank of Canada also will hold its monetary policy meeting and interest rate decision on Wednesday. Canadian unemployment rate is to 6% in November and economy is improving very well. Policymakers abruptly ended the BOC asset purchasing program last month. Therefore, already they took the big step for this year, and expecting a more tightening policy is a bit average for now. BOC will also publish its economic outlook. With following expected decisions, the Canadian dollar can rally and Canadian bond yields will rise. Number 3, Chinese inflation. With shortage in the energy markets and sharply increasing oil prices, we could see that the Chinese producer inflation has been rising and now it must affect the consumer inflation as well. For November, both producers and consumers' inflation expected to tick higher, respectively to 14 and 1.6%. Along with the last week's weaker PMI numbers, the Chinese economy now has the weak signals and it must put the more pressure on Chinese yuan as well. Number 4, US inflation. In November, US inflation increased to its 30 years high at 6.2%, driven mostly by goods inflation as the primary contributor, which shows little sign of easing. While we are getting closer to the holiday season, we doubt the good prices can cool in the near term. Therefore, we expect to see another strong monthly gain in the inflation numbers, with the headline index rising by 6.9% and core CPI by 5% year over year. Higher inflation will put more pressure on Fed for tightening policies and the stock markets to decrease. And at the end, the important updates from IFC markets. The 15 years anniversary promo is in full run. Dear traders, you still have a chance to participate in the promo and become one of the lucky winners. IFC Markets has prepared many cool prizes for you. See for yourself. Dream cruises for 2, Hublot's gold watch, iPhone 12 smartphones, Apple MacBook Pro, laptop, iPad Air tablets, and lots of bonuses. Don't forget about the Grand Prix Mustang Mach-E electronic sport car. It's a good chance to test your knowledge, and especially when such cool prizes are played out. Thanks for being with us and hope week ahead will be your week.